Is Peter Schiff. He is the author of The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country. Here's the cover of the book. It's published by St. Martin's Press. Mr. Schiff, what do you mean when you talk about a government bubble?
Well, the government bubble is, well, let's go backwards. We had two big bubbles. We had the stock market bubble, because initially a lot of the cheap money that was supplied to the economy by the Fed went into the stock market. It fed a lot of these crazy .com stocks, and we had kind of a phony economy based on all that stock market wealth. Well, that bubble burst, and it was kind of replaced by a larger bubble in real estate, in which we then kind of expanded this economy based on all this false real estate wealth. People were spending money that they didn't have, and we had a lot of consumption and employment that was a function of phony wealth. Well, that bubble burst, and now all the cheap money that the Fed is creating is going into the government through the bond market. The government is able to borrow enormous amounts of money at ultra low interest rates thanks to the Fed. And now we have an economy that's dependent on all this excess government spending and cheap money. And you can see the bubble in the price of the bonds. But this bubble, just like the two prior bubbles, is going to burst. And unfortunately, when it does, the consequences for the economy are going to be much worse than they were when either the real estate bubble burst or the stock market bubble.
And again, the two first bubbles, the so-called private sector bubbles, what was the federal government's role, in your view, in creating those bubbles?
Well, they did create them. They supplied all the air that blew them up. I mean, for the stock market bubble, if you remember the 1990s, when Greenspan was Fed chairman, every time there was a problem in the world, whether it was Asian debt crisis, Russian debt crisis, bankruptcy of Orange County, long-term capital management, Y2K, there were all sorts of things that came around. And the market got nervous, and stocks started to fall, and the Fed came to the rescue by printing money. And it was that cheap money, and by keeping rates too low during the 90s, even though they're higher than they are now, they were still lower than the market would have set them. And you had this bubble. And when it burst, the same bad monetary policies inflated the stock market bubble, the real estate bubble, only that one was worse, because not only did the government, through the Fed, supply all the cheap funding that made all the teaser rates possible, all the subprime lending possible, all the adjustable rate mortgages. They were a function of Fed monetary policy, but you compounded the government era when you had things like Fannie Mae, Freddie Mac, the FHA, putting taxpayer guarantees on mortgages that never would have been originated in a free market, because in a free market, people would have been worried about not getting paid back. But the government basically told the banks, you can lend money to people even though you know they're not going to pay you back, because the taxpayer will. So we had this huge bubble based on that moral hazard and based on cheap money, and of course it burst. Now, a lot of people like to blame the market for that. They like to blame Wall Street. It's not Wall Street's fault. I'm not saying that they're completely innocent. They drunk a lot of the alcohol that the Fed was pouring, and they acted irresponsibly under the influence of that. But you got to look to the source. You got to look at why were so many people so foolish simultaneously, not just on Wall Street. Plenty of people on Main Street were lying about their incomes and buying houses they knew they couldn't afford. They were just as drunk on that cheap money. But unfortunately, instead of learning from its mistakes, they just keep repeating them on a bigger scale. The bad monetary policies that we have now under Bernanke are so much worse than Greenspan. We've got 0% interest rates. That's doing even more damage than the 1% that we got at the lows under Greenspan. And this government bubble is enormous. And when it pops, all the banks that we bailed out in TARP, they're going to fail again, only the losses will be bigger. And the depositors are probably going to lose too this time, not just bondholders. And the government itself might have to default and restructure its debts and not pay 100 cents on the dollar on treasuries. Real estate prices have still got a long way to fall when the government bubble pops. And the scary part is this government bubble is so enormous that the government might try to prevent it from popping as long as possible, which means we have massive inflation before that happens. And if the Fed never pricks that bubble, then we destroy the dollar and we have a currency crisis that will be far worse than the financial crisis we would have based on a government default.
politically, can you foresee the government not popping that bubble that you see?
Hopefully they will pop it, because not popping it is worse. Because if you try to inflate it as big as it can, it's the dollar that collapses. I mean, what the government wants to do right now is avert losses. The government doesn't want, let's say, bondholders to lose their money. The government doesn't want depositors in financial institutions to lose their money. But they can't stop the losses. All they can do is change their form. And right now what they're going to do is they're changing it to purchasing power. They're creating inflation so that you don't lose your money, but your money loses its value instead. But in order to do this, at some point, the money is going to have to lose so much value that we'd be better off with a restructuring. I'd rather get 50 cents on the dollar than be paid in full, but have 10 cents worth of purchasing power or 5 cents worth of purchasing power.
So, Peter Schiff, if you could walk us through the time frame of how you foresee this government bubble bursting and exactly what's going to happen.
Well, it's similar to the government bubbles that are bursting now in Greece, or maybe that's bursting in Spain, right, or other countries in Europe. I mean, think back 2 or 3 years ago, Italy was just as broke as it is today. Yet they were able to borrow money, they paid record low interest rates, and everything was fine. Well, it wasn't fine. It's just the bondholders were asleep. They were oblivious to the financial circumstances of Greece. Eventually they woke up and they demanded a higher rate of interest to compensate for the risk of holding that paper. And now the Greek government can't afford the higher interest rates. And now people realize that, so they want their money back. And so now there's a crisis. Well, the only reason that we can service our debts is because the rates are so low. I mean, we can't repay our debts. That's not even possible. All we can do is service the debt. But of course, once our creditors realize that we can't service the debt, then they're going to want their money back, and we can't pay it back. Now, we can print it, but then it's not going to be worth very much. So the key is going to be, when are the creditors going to wake up and demand a rate of return on dollars? You know, because right now rates are zero. And because there's a lot of demand for dollars right now as a safe haven, even though the dollar is not a safe haven, we're in worse shape than Europe collectively. You know, the 50 U.S. states are in worse shape collectively, and the federal government, than the Eurozone economies are. I mean, we might not be in worse shape than Greece, but when you take Greece, Germany, and everybody else and put them in one community, we're in worse shape than they are. Yet we get the benefit of the doubt right now. We're the safe haven. And people think that everything is okay because they know we're not going to default because we can print money. But when they realize that printing is worse than defaulting because the potential for loss is even greater, then we're going to see a big spike in interest rates, and that's when we have our crisis. Because either the Fed allows rates to go up, and who knows how high they might have to go. Let's say rates have to go to 10% in order to stop the implosion of the dollar and put an end to inflation. Well, you know, if we have a $20 trillion national debt when that happens, that would require us to shell out $2 trillion a year in interest payments. Well, where are we going to get that? That's like all of the tax revenue.
But you mentioned the creditors. Who are the creditors that, especially for the United States right now?
Well, some of the creditors are other Americans who own treasuries, and there are insurance companies and banks in America who own treasuries. The Federal Reserve owns a lot of treasuries, so kind of we as taxpayers, even though we're not buying them with our own money, we're kind of on the hook for them. The Fed is the largest buyer of treasuries right now, but foreign central banks all around the world. China is a huge creditor. We owe them a couple of trillion. We owe Japan over $1 trillion. You know, countries all around the world, governments are holding on to this debt. You know, there was a story, I forget where it was run, that mentioned that from the peak of the housing bubble until now, they said the average American household's net worth was down about 40%. It's actually down a lot more than that when you factor in each household's share of the new debt that's been accumulated in their name by the federal government. So Americans are basically already broke. That's why I'm saying that, you know, we have to just admit that we're insolvent, because American families cannot repay the money that's been borrowed in their name.
So we admit we're insolvent. What's the solution?
Well, once you've admitted you're insolvent, then you can't pay. You restructure, just like Greece did. I mean, initially, Greece imposed a haircut of 50% on their bondholders. Well, we've got to do something similar. We've also got to lengthen the maturities. We've got to tell people that have one-year Treasury bills that we can't pay you back in a year. you're going to have to extend the maturity, maybe to 10 years, because we can't pay the money. But it's not just our creditors. America has to tell people who are collecting Social Security right now, or who are expecting to collect it, that they're not going to get as much money as they were promised. Maybe we means test it. We've got to lay off some government workers. We've got to cut the pensions of current retired government workers because Americans can't afford to pay the bills. The alternative is not that everybody gets paid, but that they get paid money of minimal value. And then we've got to look at the reasons that the economy got so screwed up in the first place, and we got to restructure and reform. We need to stop the Federal Reserve from trying to artificially stimulate the economy. The biggest problem in the U.S. is that interest rates are too low. Interest rates have to be much higher so that we have savings. No one's going to save if the return is zero. And if there's no savings, there's no real capital investment. We can't really grow an economy, raise our living standards, provide productive employment opportunities when we have no savings and no capital. So we need to have higher interest rates. We need to let the chips fall where they may. We need to let insolvent institutions fail. We need to let people who invested in those institutions lose money, right? And we need to restructure. We need to shrink the government, get rid of a lot of this government spending, a lot of government departments, eliminate a lot of regulations that have made us uncompetitive and unproductive. And we've got to recreate the free market economy that was the original source of our wealth.
One of the sub-chapters in your book, The Real Crash, is how to end bailouts.
Yeah, well, first you got to stop bailing people out, right? And you got to remove the implicit or explicit guarantee that some institution is too big to fail. Capitalism doesn't work, right, if you take the risk out, right? People have to be accountable for their actions. People have to weigh risk and reward. If you privatize the profits and socialize the losses, you get a disaster. So we need to end that perception once and for all in the capital markets, including of governments. If you loan money to an institution, an individual, or a sovereign government, if they can't pay you back, they're going to default and you're not going to get your money back. And we have to price risk into loans. And if you're a risky borrower, you have to face a high rate of interest. And it doesn't just come to banks. We got to end that subsidy for students who are borrowing money to go to college, for individuals who are borrowing money to buy a house. If you want to buy a house, there should be no government guarantee, no bailout for the bank if you don't repay that mortgage. Therefore, the banks will be more scrutinous. When they make a loan, they'll make sure the person puts adequate down payment, has the income to repay that loan. Right now, you have all this moral hazard. And what about even with banks? I don't want the government bailing out a bank account. I don't want a government-insured bank account. If you put your money in a bank, you better make sure that that bank is safe. Because if that bank fails, don't look to the taxpayer to bail you out. And once the banks know that their depositors are going to be concerned about solvency, then they're going to act a lot more responsibly as well. Right now, banks are reckless because the government has told them to be reckless because they've eliminated all the free market regulation that would have prevented them from being reckless and forced them to be responsible with their deposits.
Peter Schiff, do you think monetary policy and the lingo around it is too complicated for most Americans to get excited about?
Well, it's deliberately complicated so you don't understand it, right? The government doesn't want people to know what they're doing. That's why they came up with the word quantitative easing, right? I mean, what's that? It's inflation. It's printing money. It's monetizing debt. That's what it is. But they don't want us to know that. So it's all, they complicate it up so we don't understand what they're doing. Because inflation is what happens when the government expands the money supply. And basically that's all we're doing right now is creating inflation, and we need to stop doing that. And monetary policy, as I said, is the source of these booms and busts. It is a function of this bad monetary policy, this manipulation. That's why we need to be on a gold standard. If we were on a gold standard, we would have discipline, we would have intrinsic value in our money, and we wouldn't have all these big macroeconomic imbalances. We wouldn't have the government debt. The government couldn't run up this debt if it had to repay in gold. So the government would be much smaller if we had a gold standard. That's why the politicians oppose a gold standard, because they want to grow and grow endlessly, and gold stands in their way. It protects individuals from government, from the growth of government. So governments always want to get rid of gold. That's why the founding fathers put us on a gold standard, because they knew it would protect our liberties and prevent government from usurping power.
Peter Schiff, you've mentioned the Federal Reserve a couple times and stimulating the economy, 0% interest rates, but isn't our entire economy based on consumer spending?
Well, not really. It's based on the production that's going on in other countries. I mean, you can only buy something that's been produced, right? So you have to produce it before it can be consumed. So the economy is based on production, supply, and that comes from underconsumption, savings, investment. And right now, what's keeping our phony economy afloat is the fact that the rest of the world is lending us money and supplying us with merchandise and resources. But this can't last indefinitely. Again, it's like a Ponzi scheme because we can't pay back all the money we've borrowed. And eventually, our foreign suppliers, our foreign creditors are going to figure this out and they're going to cut us off. And then we just implode. Because it doesn't matter how many things Americans want. If we don't have anything, right? You can show up at a Walmart with all the paper money you want, but if the shelves are empty, what you're just going to go home with what you brought. So this is where we're headed. And yes, we have built up this phony economy based on this Keynesian myth that demand and spending drives an economy. It doesn't. That's the caboose. The engine is savings and production, and that's what we're not doing enough of. And we have to go back to that. Force me, right, to subsidize somebody's loan, to bail somebody out. That's not moral, right? Things need to be above board and honest. I don't want to be obligated to something unless I voluntarily choose to do it, and it's not fair, if the government does that. Or, we all know individually that if I take money from you against your will, it's immoral. Theft is immoral. But if we involve a third party like government, and I convince somebody, I vote for somebody to take your money and give it to me, how does that not make it theft? I mean, you don't want, you're not in favor of it. I'm taking money against your will, and if you don't give it to me, they're going to put you in jail. So that's not moral. Capitalism is a very moral system of government because it's based on voluntary exchange, right? People trade with one another without any coercion from a third party. But what we have now, unfortunately, involves coercion, and it's a very immoral system.
Before we get to our conclusion, I want to ask you about one other thing you wrote in your book. Americans spend too much time and money on college. Fewer kids should go to college.
Absolutely. I mean, we have probably the highest percentage of Americans with college degrees that we've ever had. Unfortunately, a lot of the people with college degrees are waiting tables, driving taxis, they're working as janitors, they're working as maids. Not everybody needs to go to college. I mean, number one, we know that. And there are colleges that are teaching remedial math, remedial reading. I mean, if you can't read and do math by the time you graduate high school, you're wasting your time. Go to college. Do something real. I mean, the best skills that people acquire are on the job. You can learn from somebody who's doing something, right? You can be an apprentice. You can get a lower paying job, and you can acquire skills on the job. Right now, we've got a bubble. We talk about bubbles. We have a bubble in education because the government subsidizes student loans. Students are able to borrow tremendous amounts of money, and so the colleges can keep jacking up tuition every year because they know the kids will get the money from the government. So unfortunately, we've destroyed a generation of Americans because we've made them borrow a tremendous amount of money, which now they're going to struggle to repay, to get liberal arts degrees that have no real relevance in the employment world, and now they're broke. They've learned nothing. They've squandered 5 or 6 years of their lives that could have been used productively to earn money and to acquire skills that would have, provided them with a comfortable living. Yeah, if you want to be a doctor, there are certain things that going to college makes a lot of sense, and you need to go to college. But the vast majority of college graduates do jobs that high school graduates could do. I mean, that people that dropped out of high school could do. So this is all a myth that everybody has to go to college, that the solution is to spend more money. It's all a myth. All it does is enrich the educational establishment, the universities, the colleges, and everybody associated with it. But the biggest losers are the kids who squander their youth and don't acquire real skills. They acquire mortgages but no houses. And society. Society is poor because we're wasting all these resources. What are the reasons that college graduates graduate into an economy with no jobs? Is because all the capital that would have gone to businesses to employ them was directed to universities to educate them instead. And they're not really educated, right? They're more indoctrinated, or they just party. And now, because money went to universities instead of businesses, they graduate and they can't get a job. So we are broke right now as a nation. We have to recognize that we're broke, and we got to stop wasting all this money. We got to get rid of all these government student guaranteed loans, force colleges to compete for students in a free market where they have to put the price down, and then prices will collapse, and only the people who can benefit from a college degree will actually go, and people will choose majors that are more likely to enhance their earnings power, because maybe if you want to major in engineering, it might be easier for you to get a loan in the private sector because they'll know you'll be able to pay it back. But if you go to a bank and you say, I want to major in comparative philosophy, good luck getting a loan, because how are you going to earn any money to pay it back? So we need real market discipline coming in to education, and we need to free up our resources. We spend too much on education, we spend too much through health care, we spend too much on housing, we spend too much money on all the things the government subsidizes, and not enough money on all the things the government taxes.
America's coming bankruptcy, the front of your book says. Is there a way to prevent this?
No, we're already broke. It's just a question of acknowledging it and how we deal with it. I lay out a plan for dealing with it as productively as possible. It's not painless, right? We're sick. We need this medicine. It doesn't taste good, but it will cure us. But if because it tastes bad, we refuse to swallow it, we're just going to get sicker and sicker. And eventually we're going to have to swallow it, and it's going to taste that much worse because we waited so long, because we allowed the underlying illness to get worse. But ultimately, if we never do the right thing, it is going to be a complete financial meltdown. It's going to be a currency crisis, a bond crisis, and it's going to make 2008, look like, a boom, look like that, the Sunday school picnic, if we don't get our arms around the severity of these problems and recognize that it's not capitalism that caused them. It's a lack of capitalism. And we need to get government out of this economy because they've screwed it up immeasurably. And we need to get free market forces back in because we are in a gigantic hole. And we got to get out of this hole. And we're not going to get out of it with government. The only way we're going to get out of it is with real free market capitalism, laissez-faire. We need to cage the government back up in the change of the Constitution, the way the founding fathers envisioned. Enforce those enumerated powers and make the government as small as possible and unleash the entrepreneurial spirit that I know is there. Because we've seen it work before in America, we're seeing it in other countries. We can unleash that, and we can create a prosperous economy. Right? But the government's not going to give it to us. We've got to give it to ourselves.
And we have been talking with Peter Schiff. The Real Crash is the name of the book. You're watching Book TV on C-SPAN 2.